Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again at the gold market. So yesterday, as we said, this gold should show some pullback. It's just because even from the technical point of view, the area around 1875 is not very suitable for taking the long position. It's just because tech market states that they were bought and has completed a few targets. That's around 1875 top, showing some wash and rinse. And in general, we've got what we have suggested. This market showing the pullback. In general, I suppose that we could even treat this type of action as a bread butter trade. So currently we do not have closed below the 3x3, but well, actually 1841 stands relatively close, and we still could get it within a few sessions probably. Market will show the pullback. At the same time, guys, currently, although we do not like it to do, but we can't just ignore the geopolitical topic. It has really big impact on the market behavior currently. So once it was announced that the Russia is moving troops out of the border, recently the markets have got the massive relief. So all markets across the board have shown the pullback approximately for the 30%. So if in gold market it was to the downside, it's just because investors were moving out from the safe haven. The same you could see on the United States dollar. Here you can see it's showing some downward actions, some relief of the previous run to the safe haven. On interest rates, markets gradually returning back to financial topic and start thinking about the changing of the Fed policy. And as you can see, rate still starts to climb, which is currently making an impact on the gold market as well. And it suggests that downward action still could be a bit more extended in the shorter term within a few sessions. At the same time, if you will take a look at this reaction, you will see that reaction is very careful. So it is not some kind of the big relief, something that's like a really big burden has been shaken out from the shoulders. So it's just minor careful pullback, which makes me think that investors still scaring something, suspect something bad. Is that it makes me think that we're not out of the woods yet. So actually, because my suggestion is that currently, United States have really big structural problems with inflation. They are not just monetary inflation that could be struggled with the Fed rate, as I already talked about this in today's video on the euro currency. They also have the structural inflation that stands on the production, in industry, in real production. And it can't be just struggled with the Fed change. And they are coming to a really big social problems as inflation could accelerate, and I would not be really surprised if currently Fed needs to raise rate in March, not for 0.5%, but for a whole percent or maybe even higher, because the problems with inflation is really very significant. And that should become evident, or at least more evident, right after the March Fed meeting, somewhere in April and May. Everybody starts to see it. That's why United States currently really strongly need to get some external factor that they could put responsibility on. And some war in Europe is a great tool for that purpose. So they could say what you would like to, what you expected. This is force majeure. You can see this is war in Europe. Fed is doing everything that it could do, but market has dropped just because you can see what's going on in geopolitics. So it's just we can't foresee that. We can't do anything. So we're doing what we just could do. And what the problem? We are not responsible for this inflation that you see here. And why I think so, that actually it's not occasionally that United States were sending a lot of weapons in Europe. It's not about the Russian invasion. So as I said, even 3 weeks ago, this will not be any invasion, at least by the Russian initiative in Europe. So you could see what's going on currently. I suspect that it might be really big provocation on the territory of the Ukraine. So this will be really big, something big should happen. And that will be presented as a background for war. So accused, maybe Russia will be accused, maybe Belarus will be accused, I do not know. But they will set some precedent that will be used as a reason for starting the hot stage. And because indeed, the United States really need the big war to put responsibility on and just withdraw the problems of the inflation inside it, to actually move the angry of the people to some external factor. That's what they need. Today in the forum I put the document that actually the Ukraine has asked for United States to provide some special technique, and it seems that should be some either chemical provocation or something of that sort, because a lot of points in this list that you will see suggest, well, I don't know what it could be. Maybe the nuclear station, electricity station might be explode. I don't know, but maybe a big dump might be explode, something of that sort. This will be really something big. But you could just briefly take a look at the list and you will see what I'm talking about. So what I would like to say is that actually I don't care about what will happen, how I need to understand what will happen in the markets. And with the market reaction and the behavior that I see, it seems that market is not really sure that everything is going okay. So some problems and some worry still exist on the market. And from that standpoint, the action that we have on the gold market, it might be just temporal relief. This market move lower, it's some kind of the bread body trade we're getting. And it seems currently that around 1841, 1845 area, it still might be not bad opportunity to go along with the gold market. Because overall processes that I see currently tells me that nothing is over yet. On the 4-hour time frame chart, we have the good downside action. OP target has not been hit yet, as you can see, for a few pips. And currently this confluence area seems very nice for considering taking some position. For example, on the hourly chart, you can see currently minor ABC pattern might be formed, or maybe market will form here. I don't know, maybe the butterfly with the, as you can see, 1841, precisely the confluence that might be completed before direction could change. So at least if you're trying to follow for this butterfly, for example, it provides you very good risk-reward combination. It's because you will take position right at confluence support, and you could place stops like just $5 below it. It will be enough. So if market will go higher, it will happen right from the confluence. At least it will be a solid bounce that lets you to move up to the break even. Also here we have some hidden bullish diversions with the MACD. So keep watching, and currently it seems that market is coming to an area where the situation could become tough again. At least it is suggested by the technical picture that we have. So if you would like to trade currently any market, especially the gold market, although you maybe do not like it, but you will have to keep an eye on the political news. Because currently they take the first stage and markets mostly driven by the political news rather than financial. So that's actually what the government of the United States would like to do. So let's see what we will get here.